If you looked the last 8 years of Tesla, there was nothing interesting. It
Hmm.
was really small on the graph, right? I think same thing happened with me in crypto. So in 2017, I started buying crypto, and for a long time it was dead. And now crypto has been having its big moment, and people are. And so to me, it's like I am not smart enough to know when the change is going to happen.
Hmm.
Um, but I do know that over a 10-year time horizon, it's inevitable. And those are the asymmetric bets that I I think everyone should.
Welcome to the Generations of Wealth show. I am your host, Derek Dombeck. Today, um, you know the drill. We got another awesome guest. We always have awesome guests. Before I bring Pascal on, the theme of today is really how to look out into the future for your investments, and you'll hear that as we get into it. But the other theme is, really growing your network and talking to other people that have done what you are seeking to do. So, with that said, if you need advice or help getting connected to somebody, whether it's one of my former guests or somebody in my network, don't hesitate to reach out to me. That is what this Generations of Wealth family is all about. So you can always go to derekdombeck.com, thegenerationsofwealth.com, send me an email, derek@globalgow.com. Let me help you. That is 100% what I'm here to do. So with that, let's bring on our awesome, awesome guest. And as promised, all the way from sunny Miami, Florida, Mr. Pascal Wagner. Pascal, thank you so much for being on the Generations of Wealth show.
Thanks for having me on, Derek.
I got a little information from you before we started recording. You are now in sunny Miami, but you spent some time in Colorado. Why don't you just give us a little bit of background, where you're from, and a little bit of your history, and then we're gonna dig into some hardcore questions.
Yeah, I mean, where I'm from, coming all the way from Frankfurt, Germany, is where I was born. Grew up in Florida, spent a decade in Colorado, and I think where my story is most relevant is, when I moved to Colorado, I was in the startup ecosystem. Ended up, selling one of my companies, and that I went through. A venture capital. I raised money from a venture capital firm called Techstars, and when I sold the company, I eventually joined Techstars and got to run their follow-on investment fund. It was like a $150 million fund, and I got to learn how to do due diligence and invest in a bunch of different deals, and that really taught me a lot about how institutions invest. And while I was there in 2021, my dad had passed away from old age. And all of a sudden, my mom was left with a bunch of money, several million bucks, and she knew nothing about finance. And so it became my job to figure out how to help her retire and live off of the income that my dad had left her. And so I went down this big journey of I knew about the investment fund world. I've been in real estate myself. I own a single family portfolio in Atlanta, and 94 units. And yeah, I basically just I went to different financial advisors and I asked them how can I turn this into income that my mom can live off of. And if you've done anything similar, basically they're all incentivized to have you invest in the stock market. And no one really touches these alternatives or investing with other real estate operators type thing. And so I joined different mastermind groups, programs, and basically like taught myself, learned from mentors how to invest in real estate with other people. and the things we call alternative investments. I've done everything. I've done invested over 3.3 million across 23 different deals now, oil and gas, self-storage, multifamily apartment buildings, retail development, like debt funds, private credit. I have venture capital because I have a venture capital background. I own some real estate, and now we've gotten the portfolio to generate over $250,000 a year. And so that's kind of my, story. I helped my mom basically. I built her a portfolio that she could live off of, and I learned no one teaches you how to do this. And if I knew what I know now, I'd be much wealthier. And so um, that's uh, that's why I kind of started what I'm doing now. I teach other LPs how to learn and vet deals and operators so that they can get the benefits of investing in real estate, like the tax benefits or the equity growth or just diversification from the stock market that no one teaches you how to do.
Well, it's a great show. That's a wrap. The end. No, I got I got lots and lots of questions now. Um, I really love the fact that you did that with your mom for your mom, but by the same token, you had to be very cautious while doing that because it was your mom, right? I'm just making that assumption. And I think a lot of us are limited by our own fear of making mistakes. How did you kind of enter? And I know you had the background with the venture capital at Techstars, which obviously helped a lot. And I do want to dive into what you learned there. But how much pressure is there when your dad passes away? And I lost my dad 15 years ago. So kind of similar, making sure my mom's taken care of. But talk about that a little bit, because I don't know that everybody really knows the pressure of what that's like.
Yeah, so definitely a lot of pressure. I can tell you that. I think, the gravity of it is if I mess this up, my mom will end up on the street. There's plenty of people that you hear if you hear about lottery winners, almost everyone's broke within 5 years after inheriting a bunch of money. And so, look, I think I've gravitated towards being investing. I've always been infatuated with investing, and uh, but really, it's like I think I would not have been as successful had I not learned um, how to do it from the best. Like learning at an institution like Techstars, I do think is a huge piece because no one teaches you how to do due diligence. If you think about how I previously invested in my early career versus, as well as probably most people, it's like you hear about a stock or you hear about something and then you don't really know what research to do. You don't really know what a thesis even is, and you maybe invest in the S&P 500 or you pick a couple stocks and then you're wondering why did it go up and down. And so I think understanding like how to verify um, and have a hypothesis about what your investment is going to do is like one of the foundational pieces that I don't think you can really be successful without.
So let's compare the differences, right? I mean, I'm not a stock guy, so I don't do it. I don't like it because I can't see it, touch it, feel it. That's why I love real estate. But if you're going to go into a scenario where do I invest in stocks? Do I invest in venture capital, apartment complexes, all the different genres that you've been involved in, how much different is the vetting process for each of those asset classes, or is it pretty similar?
Um, so I think it depends on if you're investing for yourself or if you're investing in other people. So like an example would be is if you're investing for yourself, you're the one picking a stock. So, or picking a piece of real estate. If you're investing in, a lot of these like LP investments where you're, investing in a private deal with someone else who's running it. What you're doing is verifying them more than the along with the deal, And so I think there's like stage one of like, okay, what is my thesis? I think how I approach it is, what do I think is going to be inevitable in the future, right? Like I'm not trying to figure out how much something's gonna improve over the next year or how much money it's gonna make. I'm I'm not smart enough to do that. But I do know that in what do I think life will be like 10 years from now? I'm pretty sure cars are going to be autonomous. I'm pretty sure, more of the world is going to adopt crypto and it's going to be more decentralized. I do, and so I think focusing on big picture things is at least how I have approached it. I don't, yeah.
Okay. So what's the difference in, your venture capital investments versus investing into an apartment syndication or something? Because I would say a lot of my listeners probably don't even know how venture capital works, especially as real estate investors. Um, we know what we pay our private money or we pay our hard money or some of our syndications, but what's the risk and reward in venture capital investments?
Oh man. Okay, so I think I'd back up and I'd say um, I look at these are all tools in your investment tool belt. There's venture capital tool, there's the real estate tool, there's the stock market tool, and they all serve different benefits. And so I think the first thing is figuring out like what what do I need in my portfolio? So if you have 50,000, $100,000, you can either do one of three things with your money. You can either grow it equity wise, you can get cash flow from it, like you invest in real estate that gives you monthly, or you use it to reduce your taxable income. You invest in things that give you a lot of tax credits or depreciation. Those are the three core things you can do with your money. So I think how the right way to go about it is, okay, if I am trying to grow my equity, what are the best tools to do that? Um, to me, uh, there's like the risk and reward spectrum, right? So like stocks are are like mature companies, and so the risk of them going bankrupt is a lot lower than investing in startups. Um, and so that's how you're understanding the risk piece. When you're looking at venture capital, like what is venture capital? It's you're you're giving a fund manager $100,000 and and then they're going to use that to invest in a bunch of early stage companies, of which 9 out of 10 will fail. But the hope is that one becomes a $1 billion company like Uber, Facebook, X, YouTube, you name it. And they can produce insane returns. But if you look at the industry, like 80% of venture capital firms fail to return capital back to their investors. So, it's like that's like the your 1 or 2% risky bucket. That's like it's a totally different way of playing the game and it's a lot more risk, but that can turn into a bigger slice. It has more of a return profile potential.
So when you got involved, you said you sold your company. What was the company that you sold? What was,
Yeah, yeah, totally. So we I'll preface this by saying we sold as a company making $1 million a year, but kind of kind of fire sailed it in a way. And so we were able to return our investors like half their money back. Um, but what did we do? The original idea was we built VR for real estate. So it's like, a first-time home buyer is making their real estate agent drive to 30, 40 different homes. How can someone put on a headset and like walk around, look under tables, flick on light switches, and check out a home and narrow down their 40 down to three that they're actually going to visit? And oh man, I mean, um, then the first question is how do you get all of those homes into a database that people can
Mhm.
see when VR first came out? And so we built the Uber for real estate photography. You'd go on your phone, you would select your house address where you need it, you'd add your credit card, it's already on file, and you would be matched with a photographer who shows up and you get stuff back in 24 hours. And we were like the low cost player, and so everyone used us.
Mm.
And that part of our company blew up. Uh, we got to close to $1 million in annual revenue. We were expanding to five different cities. We had 55 different team members, mostly photographers on our network. But we realized because the VR didn't take off, still hasn't taken off today,
Mhm.
that there's no chance for it to be a billion-dollar company. And if if you then when we compared, the largest photography company in the nation, they were doing $15 million a year in top line revenue, and we were doing almost one. And they'd been around for 15 years. And so, you sit around the table. I think one of the big things I learned is that like no one's interested in playing that game or growing that company if it doesn't have the billion-dollar outcome potential. And so, I spent 3 months trying to figure out, did I want to pivot the company? Could I think of a better idea? And
Mhm.
I ended up not doing that. I couldn't find something that was worth going for. And so, we sold the company and moved on.
So you sold the company, and then how did you get the position with Techstars?
So after selling the company, I was very much trying to figure out like what did I want to do next. And uh, I was starting to look at, do I start another company? Do I look at different roles at already established firms? And I realized that I wanted to learn how to be a better investor, and I was willing to take a pay cut to go work there. Um, and so I basically that firm they invested in me, right? And so they got to watch me over the last 5 years, and so I went to them and was like, hey, I'd love to get a job here and learn, and that's how I got it.
Nice. So let's pivot a little bit. I know you kind of help people learn how to be, passive investors, and I think there's this misconception that you have to have $1 million or a large chunk of money before you can really become passive. What's your mindset as far as how do you start and how do you scale to do, what you did with your mom's portfolio?
So I think there's um, the space has been largely democratized over the last decade. There are so many platforms out there to probably over 100 at this point. Hundreds, I'd imagine. There's the Fundrise, Yield Street, Realty Mogul, Crowd Street. There are so many different platforms that all have different rules. Like you can invest with Fundrise for $100, um, and you can start investing in commercial real estate. You The space that I play in is strictly for accredited investors. So you have to have 1 million net worth or more, excluding your primary residence. And um, there are so many more options that open up once you're there. So where I like to focus is I want to invest where all the big institutions invest, where these $5 billion funds, where the teachers' pension funds and firefighters associations and Yale endowment, like the people who are crushing it at the game, where are they investing? That's where I try to go.
So how do I get started is I guess a better question to to be like Pascal?
Yeah, how do you be like, I mean, look, I th I think taking a step back of like figuring out like what is it that you need to focus on in your life right now, right? Like uh, if you have a couple million bucks, you have 3, 5 million bucks, and you're probably 50, 60 years old, and you're trying to figure out like how do I buy back a lot of my time, then I think it totally makes sense to learn how to be like me and invest in these types of deals where that's the stage of life and the um, like and getting the benefits of the tax benefits and the cash flow where that makes sense. If you're earlier in your career, probably what matters more is how do I grow my equity? And so I think just keeping that in mind. But I mean, you can do that in all different ways, right? Like you could start, if you wanted to be like me, you could go on to Fundrise and you could start looking at different deals. You could go on to Yield Street or Realty Mogul and and look at those deals. I mean, if you're trying to learn, I've found that there are a lot of different operators like people who buy apartment buildings or buy industrial complexes. They put out a lot of content on their niche and their strategy, and so if you're looking to figure out how to learn, like following those types of people on LinkedIn is a great start. Learning from someone like me where I teach that on LinkedIn is my primary platform, so I think there's a lot of places you can do it, and then, I think at least how I learn is by finding a mentor, finding someone online or in person that I can follow.
Definitely. And I can I can back that up 100%. Every time I get involved in something different, I don't want to reinvent the wheel, and I want to go and get, follow in the footsteps for sure. For sure.
Yeah, it's that's like I would much rather pay, $10,000 and not make all the same mistakes and get my goal much sooner, right?
Yeah. So with your portfolio and with your mom's portfolio, what do you see, 2026 for the markets and just overall consumer confidence in the nation, and how does that affect what your future aspirations are for investing?
Okay, so this question is basically like, what do I think? Where should we be investing for 2026?
Well, where are you going to be
Where am I
investing in
investing?
2026?
I think 2026 is too short of a time frame.
Okay.
Um, I think if I'm not willing to like make a bet a decade out, it's not worth me making because I can be wrong in the short term. I've had like every single one of my bets that I've made where I've made a lot of money. My first bet was I went in total 100K with my dad 10 years ago on Tesla.
Mhm.
And the bet was no one's doing EVs. I think EVs are the future. Let's find like the only company that's really in the space, Tesla. Let's make a bet. I think inevitably in 10 years. So if you looked the last 8 years of Tesla, there was nothing interesting. It
Mhm.
was really small on the graph, right? I think same thing happened with me in crypto. So in 2017, I started buying crypto, and for a long time it was dead. And now crypto has been having its big moment, and people are, and so to me, it's like I am not smart enough to know when when the change is going to happen.
Mhm.
Um, but I do know that over a 10-year time horizon, it's inevitable. And those are the asymmetric bets that I I think everyone should be making. This is like what Warren Buffett teaches. This is like only own something that you would never want to sell. I think that is I I echo I echo that same point of view.
Yeah, that makes sense. What are you seeing in your 10-year horizon that you feel is inevitable? I mean, and I'll preface this with I believe in crypto. I'm not big into crypto, right? And I know I should put more energy into that. What do you think is the 10-year outlook?
I don't know. I think so. I think, I mean, just to piggyback off the crypto piece, we won't make it all about that. But I think if it, the trend is like companies are blowing up debt all around the world. Um, there's financial crisis after financial crisis, and people keep printing their way out. So,
Mhm.
do I think people will are going to continue to gravitate towards a decentralized system where they can't have their money inflated away? I think that is rational human behavior that inevitably will happen. And so, why would I not want to own a piece of the financial future? I think that's one. I think two would be, I'm a huge, I've been a huge bull in Tesla. I think even today, it's like, um, you know, we in no matter what I've invested in, if it's regardless of in real estate communities or in venture capital, everyone talks about betting on the jockey.
Mhm.
And I think, love him or hate him, but Elon Musk is the wealthiest person in the world who's built multiple companies that have been impossible to start. If there was one person that I would bet on, and them merging AI, robotics, autonomous vehicles, robotaxi, I think that's all inevitable in the future. Um, so I really think it's about those types of inevitable bets.
Yeah. Specific to real estate, what are you bullish on with real estate?
What am I bullish on in real estate? Look, I think being in industrial and triple net, I think is a really interesting space to be in right now. If we think over the next decade time frame, I think Trump bringing a bunch of investment into the United States is only going to boost that. I think if you think about the silver tsunami, the amount of old people that are going to transfer all of their wealth and they're kind of in their last decade. I think investing in anything medical facility, assisted living, I think is a large, sweeping play. Um, I think if you think inflation is going to continue I don't know, just like our debt continue to be a problem, or a problem that will stay with us for a while until it's paid off, I think is a um, like I would be investing in low income housing. I invest in low income housing. My real estate portfolio, like I mentioned, is in that. Mobile home parks would be it's like where is multifamily gonna go? I don't know, So like that doesn't really make sense for me to bet on. If you buy a single family home to rent it out, where do I think that's gonna go? Probably like I don't know, probably not a good bet. A lot of people bought into Airbnbs. I think terrible idea. Like, okay, our debt is a huge problem. We've had a huge run up in inflation in the last several years. People are feeling more and more poor. Airbnbs target people with discretionary income. Do I think people are going to have more or less discretionary income in the next 10 years? Like, I think that's I'm looking at big overarching trends.
Yeah. No, I love that. I love that. Well, I have one final question for you, and before I do that, I think you have something that you have to offer the audience, right?
Yeah, I do. I do. I So one of the first things, if you're an investor, you're interested in learning about the space, getting to see what all these different deals are. I mentioned you can go to a bunch of these sites. What I do is I aggregate all of that deal flow into a database, and I send an email to my email subscribers every week about all the new deals that my team has found, because we're trying to figure out what we want to invest in as well. So. Um, it's got over 1,000 deals at this point, and new ones added every Friday. So if you're interested in joining or getting that update, it is the passiveinvestingstarterkit.com.
And we'll have a link to that in the show notes too. It'll be we'll have a redirect through the generationsofwealth.com/passive so that you can get that starter kit from Pascal. And thank you for that, by the way. Final question. It's a hard one. What should I have asked you that I did not? And it can be about anything.
Oh, wow. What is the number one mistake I see investors make? I would probably this I think is just top of mind for a recurring problem that I see. But I think when people when people typically buy on the way up, um, and that's how people get caught at buying at market tops because they don't sit down and ask themselves that question of what do I think will be inevitable 10 years in the future, and they kind of like join the bandwagon a little too late. Um, Whenever I'm investing, I'm always people are telling me it's a dumb idea. Um, it's it's like when there was only one Tesla company, and every single car manufacturer didn't even have EV in their sights. Like, you know, that's contrarian. Um, like I know that I have more and more conviction now when I have a belief and I can back it up with data, and people are telling me that it's not a good idea. Um, it's just, when everyone's saying to buy something or to be on board, I think it's too late. And I think that's when you need to take time and pause and just say like, okay, I missed this one. How do I not miss the next one? What will be inevitable in 10 years?
I love that. And I have followed that myself. I do not follow the herd. I followed the herd years ago, got my ass handed to me, and I just don't do anymore. That's why I just never got excited about apartment complexes. I think people overpaid and got themselves in a lot of situations that are now biting them in the ass. So I love that advice, and the whole 10-year outlook is really solid way to be looking at things for sure. Well, sir, I appreciate your time, your knowledge, just your willingness to share, and again, everybody can go to the generationsofwealth.com/passive and get his passive investing starter kit. Pascal, thank you so much.
Derek, thank you for having me. I really enjoyed it.
Absolutely. To everybody else, thanks for being here. To our regulars, thanks for finding us if you're brand new. Go out there and share the show. Help us grow the Generations of Wealth family. And until the next one, live your vision and love your life. See ya.